Welcome back to the Humble Market Timer YouTube channel. If you enjoy the content, don't forget to please like, comment, and subscribe. Today's video will be on ticker symbol TTD, the trade desk. And I'll break down what has happened with this company and where I foresee the stock could hit a bottom. Now, before I go any further, once again, let me put out my disclaimer. Each and every time I talk about a stock specifically, I like to put out this disclaimer, just to let you know these are my own personal thoughts. I won't hold it up much longer. You can stop the video and read it at your convenience. Let's get back to the video. The Trade Desk is a digital ad company that has been growing leaps and bounds since its inception. The stock, however, has been crushed over the last 3 months, and it's particularly accelerated the last month when they announced earnings. What has caused such a fall is that they actually missed on their earnings, and their revenue came up short to what they had initially told analysts and the public that they would meet. And the stock has dropped all the way down from the 140s all the way down to the mid-50s. Now, this is a company that has had 32 consecutive quarters of either meeting or exceeding expectations. And this is the first quarter that they missed. And as you can see, the market has punished them for missing this particular quarter. Now, they only missed by about 2% on their revenue. So it wasn't like they came up short by a ton. And they still increased by 20 to 30% year over year from what they did last year. So you might be saying to yourself, well, why would the market punish them so harshly? And the reason is the Trade Desk has always traded at very, very high valuation. The way the market works is they will reward the companies that show growth, consistent growth, particularly if you're able to grow revenues 25, 30%, 50% every year and you're consistently able to do it, the market will reward you with a high valuation, even if fundamentally it may not make sense. But the market will always reward those companies that are growing steadily, and they'll reward them with higher PEs. Now, on the flip side, if they miss earnings, then they get punished. And the reason they get punished is because they are now looked at as, okay, you're no longer that growth story that we once thought you were. So now we have to look at you based on fundamentals. And is your valuation what it should be, or was it overvalued from the very beginning? And that is what has happened to the Trade Desk. But just to show you that the company is not dead, I want to show you that, as I said, they had 32 consecutive quarters where they met or exceeded expectations. And here's a graph of what the company has done over the last 10 years. And you can see the steady increase year over year in revenue. So now, is that one quarter that miss, and is that the start of the downfall of the company? Possibly. But again, the company was still able to exceed their revenues year over year by quite a large margin. And they have a consistent track record of increasing in growth every year. So I wouldn't say that the company is dead based on one quarter. They always say one data point. You can't base everything, the whole picture based off one data point, because there were tons of data points that show that this is a thriving and serious growth company. So the next thing I want to show is where I think the stock will bottom. And what I have here in the chart of TTD is basically from the time that it IPO'd to now. And as you can see, after the COVID lows back in 2020, the stock skyrocketed to huge proportions. And the last 4 to 5 years, you can see that the company has traded in a range where there's a pretty clear upper range and a pretty clear lower range. And that's the beauty of when you're able to scan out over a long time frame and look at these stocks and see how they've traded. It's amazing that how you can draw a parallel to the top and to the bottom, and you can see the range where the stock is traded, and it just gives you perfect entries and exits when you're investing, so that you know when to get out and when to get in. But as you can see here, after trading in this range for, like I said, 4 years, this latest decline has fallen out of the range. So now that it's fallen out of the range, the next question is, well, where could it go? Now, it has fallen quite a bit. You can look at the RSI, and the RSI is 23 right now, in the low 20s. That is very low from a weekly time frame for a company. As you can see based on the history, it has never been that low before in the past. And again, we're talking off of one bad quarter. So there's a possibility that at the current level, it could be the bottom. But I personally think that that's not going to be the bottom for this particular company. I think even though it has come down a lot, many of these companies are dependent upon the macro environment and what the stock market is doing as a whole. And I am of the belief that the stock market has one more pull down before it has a substantial recovery after this meteoric rise that it has had. And so what I did was I drew some lines. I already showed you the parallel that we drew, but I also drew this line right here. And the reason why I drew is because I wanted to see where there were multiple points in the chart where that area either was acted as resistance or support in the chart. And as you can see here where I drew this line, you have a point where this area acted as support many times in this last 4-year move. You had it move up, down, up, went all the way back down, hit support, bounced again, went back down, hit support, bounced again. So this area has been an area where it has been support for this stock for an extended period of time. And we're now coming close to reaching that same area of support. So I had that line drawn, and then I drew another line that showed an uptrend based on when the stock initially started trading back in 2018, and then I stretched it out to the COVID lows, and then I just kept stretching it out to see where that uptrend would land. And lo and behold, it lands and meets almost exactly where this line, where there was so much support, it meets at the exact spot almost about a month from now, right in that $40 to $42 price range. And when you have that sort of connection where you have two lines meeting together, that acts as confluence, and confluence gives you confidence that that is an area where there's going to be lots of support. So if the stock does go there, particularly if we have another push down in the market, there's a great chance that there will be buyers that will step in to support the price, and we should get a significant bounce. And I believe if they can show in the next quarter that that one quarter was just a blip, an outlier, that this company can eventually work its way back into this range that it has been in for a while and start trading higher at much higher price levels. Hope you liked the video, and we'll pick out another stock and break it down next time. Hope you have a good day. Thank you.